South Africa is set to give a clearer picture of how the economy performed in 2025. While the economy managed to grow in the first 9 months of the year, the pace has been sluggish and concerns are mounting about pressure on consumers. Ntokozo Khumalo joining us in studio for more on this. Ntokozo, National Treasury expecting growth 2% by 2028. I mean, could we even get there? It's a dream. We haven't seen those figures since, what's that, pre-global financial crisis, I think, in the country. And maybe there was a little bit before that. But we've been hovering around 0.8, 0.5, maximum 1.1% at best for the last year.
Absolutely. So we can't afford a derailment because even that dream is a dream that has been watered down over time because there were higher projections of how the economy would grow if we look back a year ago or so. But certainly sluggish growth that we've seen in 2025. And if you consider that economists are stuck at the point that we need at least 3 to 4% growth to make some sort of dent in being able to create jobs in the economy, we are far off and can't afford any more derailments. 0.1% in the first quarter of 2025 was the growth registered, 0.8% in the second quarter, 0.5% in the third quarter. So the average growth expected for 2025 is between 1.4, 1.6%. So still off from the 2% expected to then be reached by 2028. So we're not quite hitting the targets that we need to see to really see that reform, see businesses grow, specifically small businesses that are the enablers of economic growth. So when we look at industries over the years, we've looked at where the growth come from. Industries such as trade, government spending, accommodation driven by tourism. But there are some obvious weak spots. Manufacturing has declined overall over the year. Electricity production also, despite the reforms that are being put in place by, the Operation Vulindlela, that has seen a lot of structural reform take place, but still some deep structural challenges that exist. And I suppose the one sector that we often overlook because it does what South Africa does naturally is be resilient, is households. And household spending is important for nominal GDP, 60 to 65%. But we're seeing an issue when it comes to debt and how the different consumer segments are able to handle debt. A report by 8020, the credit stress report, showing that actually those that are retiring, Arabile, so whether they're retiring with a pension or on a SASSA grant, they are struggling to keep up with their debt repayments. So a lot of defaults that we are seeing. While overall there is a decline in defaults in different segments of the economy, we are seeing that there's the devil is in the detail, as they would say, because that data doesn't paint a full picture. Someone might be able to catch up on one debt, but fall behind again, catch up and take on another loan to pay off the debts and struggle. So that issue being a concern around the defaults that we're seeing there.
Because a lot of that seems like, though, it's because we have a weakened disposable income basis for the country, meaning everyday amount of money that people actually have to spend, whether it be a debt, whether it be on household goods, anything else, there just seems to be a struggle to be able to have enough of that to pay for the things you need on a daily basis. That figure isn't getting any better, or at least moving in an upward trajectory quick enough to help.
Yeah, absolutely. And we did see some interventions from National Treasury to try and ease some of that pressure off households. But it is a question of, is it too little too late? Because when we look at these economic data holistically, look at gambling, for example. A lot of people taking out debt to be able to gamble to meet the cost of living. So absolutely right that the income that is coming in is not matching up with the cost of living and the cost that people have to meet up with. And the concerning thing is some of those defaults are on assets that really contribute positively to the economy. So there is different spending. And when you're spending on debt, on a home loan, for example, that is something that should be contributing positively to the economy, but putting pressure. So I did this morning speak to national debt advisors just to understand the difference between good debts and bad debts and what that means for economic growth ahead of us then hearing from Stats SA tomorrow. Let's hear what they had to say.
Unhealthy debt could be debt such as credit cards and unsecured loans with higher interest rates, where one tends to spend money on either day-to-day goods or on bigger ticket items that you don't have cash for immediately available. While good debt is debt that contributes meaningfully to your life. So for example, like home loan, that helps you obtain an asset, and that asset can be used to build wealth. Same as a vehicle finance. Because of the size of the debt, most people don't usually have that cash available. So vehicle finance is also a good way to build up your credit score, and it gives you access to a vehicle which contributes meaningfully. And then finally, debt that contributes towards your own development, your professional development. So study loans, for example, those are good types of credit. So unfortunately, when household debt becomes unsustainable, consumers tend not to contribute to the local economy, and unfortunately, that then drives down GDP growth.
All right, now in a recent interview, the finance minister, Enoch Godongwana, had actually said that South Africa is a taker of all the risk in the world, a risk taker, but not in the positive sense, right? But in a way that whenever anything happens globally, we get impacted by that quite a lot. And what's happening in the Middle East could certainly impact us too. Let's talk about that impact of the Middle East tensions on the oil price, etc., could impact then growth locally.
Absolutely. And if I'm correct, when I was in lockup ahead of budgets, there wasn't a scenario for what is happening right now.
It happened like a few days later.
Yeah, it came in a few days later, so probably still working on those scenarios. The Reserve Bank usually has those quarterly bulletins, so we expect that they would have that scenario in there. But that could be another derailment then to that 2% growth by 2028. How much of a derailment is yet to be seen, but we are already seeing the impact on fuel prices, which according to the economists and analysts, Arabile, was one of the positive indicators that the country is moving and edging towards that growth. So if we see fuel prices increase substantially, will that have a trickle effect on inflation? Will that have a trickle effect on the Reserve Bank reversing on interest rate cuts? So really some of the gains that have been made for consumers could reverse due to what's happening in the Middle East. So we wait to see what that scenario planning looks like from National Treasury and the Reserve Bank.
11:30. Is that when
11:30 is when the announcement is made or the presentation is made by the States General.
All right. Dr. Khumalo, thank you so much for bringing us that. That's an update that we anticipate to get on the growth rate for 2025. How did South Africa's economy fare?